Hello guys, I go by the name of Ammarullah. As you know, rejection block. So today we are going to talk about rejection block. Do you know what rejection block is? Oh, this is the first time of you hearing the name. If this is your first time of hearing about rejection block, stay calm and listen to me and hear how I will explain what rejection block is and how you will use it uh, for your confluences of trading. All right. So if this is your first time seeing this channel, you should make sure you like this video and subscribe to this channel so that you'll be getting updated of whatever we are posting. Right. So this is rejection block. This is how I use it on this trade and catch this move. As you can see, it is a 1 to 4 trade on Bitcoin. This is Bitcoin chart you are looking at right now. So let me clean everything and start from higher time frame for clearer view and more detailed explanation for you guys to know why I short the market. The market overall is uptrend, if you can see, but that was just a scalping, the one I did. The overall market is uptrend, if you can see from here. Even on daily, 4-hour, all the time frames, all the higher time frames are showing bullish. They are all uptrend, right? So that was a reversal trade, just like not fully reversal. It was just a scalping. I just caught it like a short scalping, right? Like 1,500 pips thereabout. So let me delete everything and start afresh and show you how it started. How I use the rejection block for that trade, right? So on the higher time frame, if you can see, we are on daily now. The reason why I short the market right there was because of this imbalance CB. This CB fair value gap with down close candle on daily. That's a level I have drawn for weeks now. It has been there for a very long period of time. So as I see the trade is rising to that place, I know there may be some reaction there. Then this first candle, as this first candle is there, it rejected from there. So that particular rejection, that was what I used as the reason to short the market from there. So I did not short it from the first rejection of that first candle, which is this one around here, I think. So I anticipate the market to reverse back to that place, so that we use that same level to catch another sharp move again, right? So on 4-hour time frame, the market is still uptrend and it rejected from here. Then the market returned back to that particular place. This particular place, that last week, that tapped the higher time frame level. The week that rejected, that's what we call rejection block. It's something like this. It will be something like this. If we are to draw it now, it will be something like this. This is the body of the candle, right? Then you will see something like this, a week, right? So this will be the body and this will be the week. This week now, from the that's for a bearish candle rejection. For a bearish rejection candle, it will be something like this. For a bullish, it will be the opposite, which is something like this. The body of the candle, then a week. This will be for bullish candle, right? So where you use as the rejection block is this particular week. The week will always be the rejection from the body, right? You mark it from the body of the candle to the wick, the level that the place that separated from the body of the candle, which will be the opening price of that particular candle. Let me just say that the opening price will be the rejection block, right? Something like this for the bearish, which is exactly what happened here. All right. So on this 4-hour time frame, to be something like this is the first candle that rejected from the level of higher time frame level. Then this is the second candle that came there and respected and reacted to the to that particular rejection block, right? Let's go to the let's still go down to lower time frame. You can see even on this lower time frame there is still that particular rejection level, right? So and the market came back and reacted to that. So after tapping that particular level, that level of higher time frame, after tapping it, the market sold down, then come back again, engulfed this particular candle, the first candle that tapped there, and take out the liquidity. This is bearish engulf. Let market sell down, do create another liquidities. If you can see something like this from here to here, it's a down trend. What do they call it? Trend line liquidity. This is a trend line liquidity. If you see something like this, you know the market will definitely, they may definitely come back and take out this early sellers liquidity, then look for some level that it will tap to before selling down. So that's exactly what happened here. After the market created this liquidity, this trend line liquidity, it created the trend line liquidity. When it created the trend line liquidity, if you can see up here, there is no any particular like order block or anything here, right? There's order block here, right here, but this candle already tapped it before selling down here, so this will not be considered as an order block anymore because it was already claimed. You understand? This is a mitigated order block. It was already mitigated, right? So from here to here now is where we gather liquidity, and up here is where we will expect a PDRA or any level where we expect the market to come back and sell from, right? So we don't have anything because the other block is already been tapped, so we expect the market to react from this rejection block. That's the only confluence we have now, this particular place, this rejection block, this candle that tapped higher time frame level and left and rejected from there with and left a week and leave a week. That's a rejection block, right? So after the market come here, take out the trend line liquidity, it's went straight there to the rejection block. This line is where I mark as the rejection block on lower time frame. On higher time frame, even 1 hour, it was there on 1 hour, it was there on 4 hour. Now on 30 minutes it's still there, particular exact same thing. You understand? So I used 15 minutes time frame for the entry. I did not just executed the trade right. You will not just execute the trade right when it just came back to the rejection block. You need the market to reject from that particular place too before you have the confidence to just take the trade. You will not just expect it to sell down just because sometimes it will not sell down. It will definitely not sell down. After taking this liquidity, it may just continue to like be pushing up because the higher time frame direction is uptrend already. So it may just continue to go exactly with the higher time frame level, right? With the higher time frame direction, right? So what you will do instead is after the market come back and enter the rejection block where you expect it to sell, you wait for it to reject from that particular place first, which it did. If you can see, as the market take out this liquidity, trend line liquidity, and tap the rejection block level, so it sold down. If you can see this massive, these down close candles, and there is still another particular candle that reject from there. It's another rejection block. We have another rejection block. If you can see here, right here, it's here. So it formed a rejection block showing you that yes, the market is ready to go down now. It is showing you like the willingness to go down. Do you understand? With these two candles, bearish candles, rejection block and a bearish candle, we call this the candle inverted hammer. It can be called like that, or pin bar, anything. So this candle will definitely make the market react from there. So where your entry is supposed to be is at the body of that candle, at the rejection block of this candle that rejects from the higher time frame rejection block again. You understand? That was where I placed my entry, and the target, which is short, and the target you target the next close liquidity, next opposite close liquidity, the liquidity that is closer, which is this loose. These lows are the next closest liquidity. You will not expect the market to keep going down like and come back and take all these lows here, because it is already in uptrend. You are counter trading. You are trading against the higher time frame direction. It's just a reversal. We are just trading reversal, right? You are trading against the market, so you will not expect it to keep going, to keep selling down, which it may do. There is a possibility of it to do, because you already tapped a higher time frame level. But now you are just scalping it. Just scalp it and take profit at the opposite side of the liquidity, which is the closest one, which is right here. And stop loss will be above that first rejection block, which is this high. It will be above it, which is a very good trade, as you can see. If you place it right here, it will be 1 to 6. But me, to be more safe, I placed it more, like I expanded it more to escape funny things. You understand? It was 1 to 4 point something trade. So that was how I did it. That's how rejection block works. You understand? So it's a very strong tool. If you are using it for any of your entries, if you add it to your confluences of trading, it will definitely be giving you sniper entries, something like this. It will definitely be giving you sniper entries. So you see, as it is, as it tapped the rejection block, rejects from there, it still came back and tapped the rejection block that just tapped the rejection block, and reject again, consolidate again, come back again, and tap this one, then sell down straight. 1 to 4 point something, which is, and it was 1,523 pips, if you can see. So that's it. Thanks for watching. If you find this video impactful, please like and subscribe to this channel for more information to come, because I'll definitely be dropping more informations. But it depends on the engagement I see on this video whether I should continue or not. Thanks for watching. Bye.